evening. Tonight we come to you from Wall Street. It's a short street, Wall Street, just a few blocks between a subway stop and a ferry dock in lower Manhattan. But in recent months, this has been the center of fear, blame, and chaos in the world economy as the mortgage crisis explodes into the credit crisis into the liquidity crisis. For now, the traders have gone home and the traffic's thinned out. But even when the streets were filled with laid-off bankers, it was nothing compared to the bedlam hidden inside, both on the trading floor and where cameras weren't allowed, inside those corner offices and the halls upstairs, where deals are hashed out and decisions made. A year ago, as the mortgage crisis started, former Fed Chairman Alan Greenspan said this looked like just one of history's little bumps in the road. The savings and loan debacle of the late 1980s, for example, not the Great Depression of the 1930s. That word's been bandied about a lot lately, but even those of us who grew up in the Depression can barely conjure up the scale of the devastation that it wrought. Between 1929 and 1932, industrial production in this country fell 50%. Prices fell 20%. Incomes fell 35%. The stock market was down 75%. Since then, economists think they've learned a lot, creating institutions like the FDIC to prevent banks from going under. In the 1920s, we'd never have coordinated across the Atlantic to flood markets with money to keep loans from freezing up. And we've created a social safety net, so mass migrations and widespread malnutrition are unlikely. Although the most recent events are the biggest test yet, by conventional measures, our economic safeguards in many important ways are working. The numbers we normally look at to figure out the state of the economy aren't bad in a lot of key ways. The economy actually grew at 3.3% last quarter, about average since World War II. Exports are booming, but are these the right numbers anymore? And why does it feel so bad? 3/4 of Americans think the current crisis is only going to get worse. 9 out of 10 think the failure of Lehman Brothers and the fire sale of Merrill Lynch is going to have a bad effect on the economy down the road. And the media can't get enough of the fall of the titans. 2/3 of Americans don't trust the government's interventions to work. We as a nation, as a people, are feeling insecure. Later in the program, I'll talk to an economist who'll explain what's really going on and what it means to the world and what it means for you. He'll talk without the jargon. He's a straight talker. But right now, when we come back, we'll zoom out from Wall Street till we can see the continent of Africa and the desperately poor nation of Congo, where a mining company on the New York Stock Exchange is affecting the lives of millions of people, all with the help of the United States government. And now the story of how an American company does business where no one is watching. Our 7-month investigation will bring you halfway around the globe to the Democratic Republic of Congo, once known as Zaire. And we'll show you how hundreds of millions of U.S. government dollars are helping a politically connected American mining company take away a big chunk of Congo's economic future. While the people of Congo are some of the poorest on earth, the land holds some of the richest reserves of minerals anywhere. We're talking about diamonds, gold, and these days, copper. A metal best known for covering the penny is worth a lot now because of its uses in construction and electronics for pipes and wires. The demand for copper in booming economies like China and India has shot up, and so have the prices. Copper is now worth more than 4 times what it was just 5 years ago. But the people of Congo have very little to show for it.
And that brings us to these mineral-rich hills in southern Congo, and a place called Tenke Fungurume, believed to hold the largest untapped copper mine in the world. It's also home to more than 50,000 villagers who have found themselves on the front line of a conflict between a powerful American company and Congo's voiceless poor. The mine is owned by Arizona's Freeport-McMoRan, and this front gate is as close as they would let us get.
For the agenda today, we're going to head up to the mine.
These images were shot by a Congolese journalist on a company tour. When it's complete, 10K annually will produce more than 250 million pounds of very pure ore. And at prices approaching $4 a pound, this red dirt could generate hundreds of millions of dollars a year. That could have been good news for Congo, but it hasn't been. That's because most of the wealth pulled from this mine won't go to the people of Congo. Instead, it will go to Freeport, the world's largest publicly traded copper company, whose headquarters is thousands of miles away in Phoenix, Arizona. The American company bought a majority share of the mine from the Congolese government in a backroom deal that many are now calling dirty and unfair, especially for the thousands of displaced villagers whose ancestral land will soon become a vast open-pit mine. We asked Freeport to let us speak to these villagers, but the American company once more denied us access to its property. And local police, paid by Freeport, were told to block us from entering. Our producer and cameraman reporting team tried anyway and were placed under arrest. But a local journalist we hired was allowed in, and he brought along a camera to get the villagers' story. A story Freeport doesn't want you to hear. And this is why. These people have been waiting for more than 9 months in tents or in the open air for Freeport to build them new homes. You won't hear from them in shareholder meetings, but they told us the company made them many promises that it has failed to keep.
Tangu balikutosha yapata kile kesho tangu balikutosha kule kwa mulungu.
Tangu balinitosha ni kulima mimi moya ile tu makuta balinipa ni kidogo.
Balikupa makuta ngapi?
Ile makuta balinipa.
Tant que Fongru Mining nous disait qu'il peut nous supporter pour la nourriture, pour les soins médicaux, pour les études des enfants, mais il n'a rien réalisé, aucune chose.
The villagers said the company forced them off land where for generations they had grown crops to eat and sell at market, their only source of food and income. The hard, rocky soil in their new home has proven useless.
Ici, la terre n'est pas fertile. On a cultivé, c'est la première année, mais ça ne sort pas. Il n'y a pas à manger. On n'a pas une bonne eau potable ici. En tout cas, on souffre tellement.
Those like Chief Nicola Biumia Mbula, who have tried to push the American company to hold up its end of the bargain, are growing impatient. Chief Biumia speaks for thousands of villagers who say life has gotten worse.
Ndio kushirika tukashirika. Juu kama bobe wanatumika mubulongo yetu ya Shiba Sultani. Na wapende kutusaidia Shiba Sultani. Shiba Sultani tunapaswa kushirika.
Chief Biumia's family has ruled this land for 7 generations, but he told us Freeport has ignored the concerns of his people.
Tunapenda masomo.
He says they will resort to violence if needed, and it's not an idle threat. In January, thousands of local protesters demanding jobs at the mine, including some from this village, clashed with local police.
Ndio tunasema masauti juu tunabafikishia abo ni mzuri na abantu tize revolte mkuji revolte banashikia makele ya nini ndio wale bakubwa bakule yulu batakuya.
But Freeport says it is listening in this promotional video.
The people of Freeport-McMoRan Copper and Gold are engaged with the community, building relationships and programs to support health, education, and economic development.
So why should Americans care about the suffering of these villagers on the other side of the globe? We will show you tonight that the U.S. government is partly to blame. we spoke to one American who is trying to help Congo push back against the foreign companies. Columbia University law professor Peter Rosenblum.
You agree or disagree that the Congo has perhaps among the world's richest resources in such things as copper?
It's the place where the danger in digging in your backyard is that you'll break the shovel on something else that has just become the world's most precious and searched for mineral in some new industry.
Professor Peter Rosenblum has traveled to Congo for years to research the country's sale of its valuable mines to Western companies. Deals, he says, were based on shady transactions, overt bribery, and in some cases, illegal profiteering. These images were shot at a foreign-owned copper mine not far from Tenke.
Billions of dollars of value have been created on stock markets that haven't benefited the people of the Congo. And that's a depressing thought.
We joined Professor Rosenblum in Congo in May. He was there to share his findings with Congolese lawyers, activists, and academics. Rosenblum cites Tenke Fungurume as just one multi-billion-dollar example of how companies from around the world took advantage of Congo's violent and politically unstable past.
There were so many elements to that deal at the time that it was signed that should have sent the red flags.
30 years of rule by the corrupt U.S.-backed dictator Mobutu Sese Seko left Congo desperate for cash. Mobutu's notoriously extravagant spending on himself and his cronies had bled the country dry. Mobutu's fall led to a 5-year civil war, the world's deadliest conflict since World War II, which left more than 4 million dead by the time it officially ended in 2003.
Soldier given no chance of survival.
During this chaotic period, the corrupt and cash-strapped Congolese government signed some 60 contracts with the world's largest mining companies, selling out the country's future for quick money. And that's why a Congolese government commission and some in parliament have now called for renegotiating or nullifying all 60 contracts, deals that heavily favored the Western companies. Next week, the Congolese government is scheduled to lay out its demands to these foreign companies, including Freeport-McMoRan.
The feeling of waking up at the end of the war and finding that much of this was apparently gone in some way or another has been a big depressive factor.
But Freeport, again in its promotional video, says its investment will improve Congo's economy.
Minerals providing a shining future. Metals for a global economy. An investment in the future of the Democratic Republic of Congo.
Rosenblum told us that despite Freeport's assertions, Congo's sale of Tenke to the American company is a particularly shameful case for both Congo and the United States government, which backed the deal.
Rosenblum places a great deal of blame on one individual, a high-ranking diplomat inside the U.S. Embassy in Congo named Melissa Sanderson. He says Sanderson used her position of power to push the deal through. She then took a job with the American company, less than a year later, as vice president in charge of government relations. We tried repeatedly to contact Sanderson in Congo and when she recently visited the U.S., but she declined our initial request for an interview and never responded to follow-up email.
Sanderson, however, had no reluctance to appear on Congo State Television in early September after a meeting with Freeport CEO Richard Atkinson and Congo's President Joseph Kabila.
Melissa Sanderson, who was the political officer at the embassy and also acted as chargé d'affaires, was, by reports from people in the president's office that I consider to be credible, was instrumental in convincing the president, Kabila, to sign off on the deal.
It's an example of how much pull Sanderson has in Congo's government, Professor Rosenblum told us when we spoke to him in New York.
How well connected was this lady?
She's certainly well connected when it comes to the government circles in the Congo. She had access to everyone from top to bottom. I've been in meetings with ministers while she's called.
She's got people's phone numbers, she's got people's addresses, she's in their offices, she's calling, she's present.
Without specifically addressing Sanderson's case, a State Department spokesman said a move from the public to private sector could violate the department's ethics policy, especially if the employee used his or her government contacts to benefit the company. Sanderson's relentless advocacy for the company from the embassy building led many in Congo to believe it had the official backing of the U.S. government.
Glad you're here. Thank you.
Even President Bush, shown here meeting with Congo President Joseph Kabila. A powerful misconception in a country desperate for foreign aid.
Continued support from the United States.
The U.S. Embassy even threw a party to celebrate the announcement of the sale of Tankei in October 2005, just 3 months before the company says it began recruiting Sanderson. So what's wrong with that?
What's wrong with it is the appearance of impropriety. To see this shift from government into private enterprise and the assumption as well that she probably benefited from that, because chances are her salary went up too.
Rosenblum told us Sanderson's move straight from government to the private sector made what he called a mockery of America's role as an advocate of good government in Congo.
My friends inside the Congo said, the United States pushing for good governance here? Are you kidding? Look at what they've just done. They pushed us to sign a contract when we shouldn't have signed it, and then the lady who pushed it, now she's making money off that contract. And you're trying to tell us that we should come clean about problems in our contracts?
Many observers of the Tankei mine deal were disturbed by how susceptible Congo's government was to Sanderson's push, and how reckless it was in its rush to sell the mines to Western companies, guaranteeing so little for the people of Congo. In this internal World Bank memo we obtained, one bank official expresses, quote, serious concerns about Tankei's American suitors. And this was an agency, the World Bank, that was trying to help Congo bail out its dismal post-war economy by selling its state-owned mines. The bank's chief mining specialist, Craig Andrews, said the process was so flawed that the government of Congo, quote, may not have received the full value of the mines. And he criticized the, quote, complete lack of transparency with respect to the negotiations and approval of these contracts. Still, in 2005, closed-door negotiations continued between the American company, Sanderson, Congolese officials, and a Swedish company that had bought a majority share of Tankei 10 years earlier. Only those who were present at the meetings know how it was that the American company emerged with what many describe as a sweetheart deal, a controlling stake in Tankei that inexplicably reduced Congo's share in the mine from 45% to just 17%. A deal that promised Congo little in the way of future revenues that could be used for roads, schools, and other development.
Why did Congo agree to such unfavorable terms? The most charitable explanation is that the post-war government was filled with inexperienced and outmatched negotiators. In addition to Sanderson, U.S. Embassy officials also declined our request for an interview, as did Freeport. But in an emailed response to our questions, a company spokesman denied Sanderson ever had any conflict of interest while holding her embassy post. The spokesman, William Collier, said after the company offered Sanderson her job, she, quote, immediately notified her superiors and recused herself from her already limited involvement with the company. Freeport's help from the U.S. government didn't stop at Sanderson. The company's politically connected board was able to secure assistance from American officials at home as well.
Freeport-McMoRan is a company that was famous for its use of political leverage when necessary.
Big lobbying operations?
Big lobbying operation. I mean, people at the U.S. Embassy in Kinshasa eventually let us know that the embassy was scared to do anything for fear of getting up on the wrong side of Freeport-McMoRan. The story of Africa and now the story of the Congo again is that American investors can disrupt the rest of American interests in the country because they're loud, they're organized, they're targeted at a time when other interests like democracy or anti-corruption are viewed as being much more amorphous and don't have the same kind of allies.
A key ally of Freeport in its Congo deal is a little-known U.S. government agency. It's called the Overseas Private Investment Corporation, or OPIC. And from this nondescript Washington office, the agency channels billions in U.S. government money to American companies willing to invest in poor countries.
As a developmental organization, OPIC approved the project because of our priority to foster economic development in sub-Saharan Africa.
The president of OPIC is Robert Mosbacher, Jr., a Texas oil man and Bush family friend and fundraiser. And despite complaints about Freeport's work in Congo, he and OPIC's board agreed to provide the company with $400 million government dollars to develop the mine.
Thank you very much.
At this public OPIC hearing in July, Mosbacher cited Freeport's work at Tenke as exemplary.
The project supports continuing efforts to carry forward political, economic, and social transformation following the first democratic election in 40 years in that country.
At the hearing, Kristen Haidt, a lawyer for the Environmental Defense Fund, challenged the notion that Freeport's project met OPIC's goal of improving development.
Local residents do not appreciate that the mine is slated to employ less than 2% of the local population, or that the company does not intend to make education and health care as much of a priority as mining.
Haidt collected this information firsthand. We first met up with her when she traveled with Columbia professor Rosenblum to investigate the impact of the mine on Congo. She said she had warned OPIC about financing a project with so many potential environmental and social problems, everything from the destruction of rare birds' habitats to the contamination of drinking water.
Risks of heavy metals, lead, cadmium, also arsenic. OPIC even cited potential for radioactive waste. All of these raise concerns about what is the impact to the drinking water, to the groundwater, to the surface water, to the soil, to folks that grow plants, live off the land.
Haidt said that despite her warnings to OPIC, the agency wrote to tell her that it had approved financing for Tenke, and without hard provisions in place that would hold Freeport accountable for any damage caused by the project. OPIC lawyers concluded the Freeport deal with Congo had been fair, and Mosbacher at the hearing defended his agency's financing of the project.
Our due diligence, conducted with local and international counsel, concluded that the Tenke project's contracts were executed and amended in accordance with the law.
But Congo's government reached the opposite conclusion. In March, a commission formed by President Joseph Kabila called for the country to void and renegotiate the Freeport deal. Freeport has refused to budge.
So now we're in a case where we have U.S.-backed investment of a contract for a project whose underlying contract has been determined illegal by the government in which the project is located. This is quite problematic.
Having no other speakers, I see no other. The meeting is closed. Thank you.
Mosbacher, through OPIC's press office, declined our request for an interview. At the hearing, Mosbacher said that OPIC would withhold Freeport's money until the company met unspecified preconditions. Digging and copper production are set to begin at Tenke in 2009. Thanks in part to anticipated revenues from the mine, Freeport shares shot up after the deal was signed, and the company's CEO, Richard Edgerson, was the USA's third highest paid executive last year, earning more than $65 million, according to the Associated Press. Edgerson told Congo's state-run news channel in early September that the project would also benefit the people of Congo.
We're planning on investing roughly $2 billion in the project for the initial phase, and we see the opportunity for further significant investments in the future as we expand the operations.
Freeport says it will spend $9.5 million on new homes for some of the displaced families at Tenke, homes that remained unfinished and empty when we visited in May. The company's spokesman, William Collier, wrote us in an email the, quote, temporary tents we have donated are considered an improvement to the traditional structure. But the more than 1,000 people who have lived in tents for months strongly disagree.
La vie, en tout cas, c'est vraiment triste.
Desperate for money, some displaced villagers have resorted to illegally digging up copper from nearby deposits with their hands. Grueling work that these men from another village say brings just a few dollars a day. These miners are hardly an exception. Few people living in Congo's mineral-rich copper region have seen their lives improve. So it only seems logical that many in Congo's government have now called for getting more out of Freeport and other companies that gobbled up the country's mineral assets in what the record and many critics indicate are corrupt and one-sided deals. We spoke to Belgian journalist Rolf Kusters, who brought the origins of the 10K contract to the world's attention in a report published earlier this year.
Bad things have been happening on both sides. I mean, with the government as with the private companies.
After poring over reams of internal documents and interviewing dozens of insiders, Kusters says he was shocked at what he found. That a decade before going into business with Freeport, a Swedish mining company gained control of the mine using what he calls deception, the chaos of a bloody civil war, and well-placed payoffs to government officials.
Everybody got $1,000 because they said, well, if you don't pay these people, they will not show up, and we have to do the signing of the agreements.
Swedish mining giant Lundin never got work going at the mine. Instead, it waited nearly a decade until copper prices were soaring and then sold the controlling interest to the American company. Do you know the phrase sweetheart deal?
I'm not familiar with that phrase.
Let me note that your native tongue is Dutch. Well, a sweetheart deal would be one in which corruption was part of the process to create a very advantageous situation for one party. So my question is, does this meet that definition?
It certainly was a sweetheart deal. They didn't consider the interests of the Congolese people and the Congolese nation.
We spoke to one former government minister, now a teacher, who had a close-up view of how foreign mining companies were doing business at the time.
Certainly, people got bribed.
Florent Kambale Mututulo was named Congo's mining minister in 1997 after the fall of the U.S.-backed dictator Mobutu. It wasn't long before a foreign businessman approached Mututulo with a suitcase full of cash.
$1 million for me, for the minister, not for the government. $1 million. I said, well, what for, sir? You just fill in your papers and pay the fees that are required by the government, everything will be all right.
Mututulo says he never accepted money, but you have to look no further than the luxurious home of a late mining official to see how some in Congo's government made it rich. The man's widow is able to live so well in part because 10K's foreign investors have been renting these properties from the family since he signed off on the deal. A nice bit of extra cash for the family of a government functionary. She still receives a monthly check from Freeport.
Ça n'a rien d'exceptionnel. Ils sont là, ils sont locataires comme ils auraient pu être locataires dans n'importe quel bâtiment ici en ville.
Professor Rosenblum said that even if Freeport didn't offer bribes, the company can't claim complete innocence.
What should they have known at that point about corruption that went into the deal in the first place? About, is this the equivalent of sale of stolen goods? What kind of cleansing did it go through?
Thanks to the work of Rosenblum and others, news of how Freeport took control of 10K has traveled to Washington. In response, Representative Gwen Moore, a Democrat from Wisconsin, has co-authored a bill that would force American mining companies to report payments to foreign countries where they do business.
When you look at the Temke mine and see the absolute inequality between the mining company's interests and the interests of the community, you have to wonder about the propriety of this relationship.
But despite calls to reopen dozens of mining contracts, there are signs that business will continue as usual for overseas mining companies like Freeport-McMoRan. Some in Congo's government are afraid that voiding the lopsided mining deals would scare away other potential investors. The most likely alternative would be to leave these deals in place, allowing foreign companies to keep getting richer from Congo's minerals and taking away Congo's most promising opportunity to climb from the ranks of the world's poorest countries.
And the tragedy is the obvious tragedy, that the opportunities are there, the possibilities to make new deals with the world's investors are there, and instead we're likely to see those investors walk off with the money along with a few wealthy Congolese, and the situation in the country remain as it was before.
Coming up, understanding what's going on here on Wall Street. We'll talk to one of the very best, one of the most respected people in the analysis field. You'll want to hear what he has to say. And now to the crisis right here on Wall Street. If you're a financial expert, the news here in recent weeks has been disturbing, to say the least. But for most Americans, the news from here is complicated and confusing, and it's easy to be alarmed when you don't understand what's going on and what it means to you and your investments. And to get some perspective and give you some context, we've asked one of the best, most respected people in the business to break it down for you. Gary Schilling is a former chief economist for Merrill Lynch for a long time and now runs his own investment firm. What's the single most important thing for people to know about what's happening just now?
I think what they ought to know is that the reaction by the government, by the Federal Reserve and the Treasury, is obviously because they think there are some very, very serious problems there. Government, by nature, does not go out and get ahead of situations very often. Now, maybe the Secretary of the Treasury, Hank Paulson, with his Wall Street background, is an exception to that rule. But by and large, government actions come after the fact, and being too little too late is a pretty common expression in the way they react. You look back, and just really since March, Bear Stearns basically was carried out. And then we had Fannie Mae and Freddie Mac, which are now, in effect, taken over by the government. And Lehman was allowed to go bankrupt, and American International Group, AIG, was bailed out. The question is getting to be who's next, and Merrill Lynch really forced into a shotgun marriage. But I think when you look at government reaction, you've got to conclude that, at least in the eyes of those people in the Beltway, they think there's some very, very serious problems.
Let's talk with those people who are in the living room. They're not bankers. They make a living. Sometimes they have a little difficulty meeting the bills, but have been okay. Are we at or near the end of these problems? Are we somewhere in the middle, or do we still have a long way to go?
I'd say we're about in the middle. This recession, in our view, has 4 phases. 2 of them are underway, 2 of them are just commencing. The first phase was the big difficulties in the housing area, precipitated by what we call the subprime slime. This was all these loans to people who really couldn't afford chicken coops, but because of very loose lending practices, low interest rates, securitization, the fact that they took these mortgages, packaged them, sold them off to somebody else so they didn't really care, all these factors, you ended up with people who couldn't afford chicken coops who ended up in 4-bedroom houses. And that started to come unglued early last year, early 07.
So that was phase 1.
That was phase 1. Phase 2 was when this spread to Wall Street, and it was kicked off in June when 2 very large hedge funds run by Bear Stearns basically were declared worthless. And then we had a freezing up of many of these markets. The Federal Reserve started to step in. And the Federal Reserve had to, in effect, substitute for the banks. What the banks normally do, lending to each other and then lending to the rest of us, that started to dry up. And those two phases are still continuing. We think that we're only about halfway down in terms of the decline in house prices, and house prices are down 18% from their peak on average nationwide. We think they're going to end up down 35 or 40%. And Wall Street's problems, now it depends on how this bailout attempt works, of course, but Wall Street's problems are still very much unraveling. Those two phases, though, are financial. They have not been reflected as yet in a very big way in terms of layoffs and in terms of people's incomes going down. Consumers have been actually spending at a rising rate, much more rapidly growing than their incomes for 25 years. Their saving rate has declined, which means their spending on average has grown 0.5% per year faster than their after-tax income. They financed that in the 80s and 90s by borrowing against their stocks. More recently, they borrowed against their houses, but that house appreciation is gone. So consumers have run out of money. And phase 3 is a huge retrenchment in consumer spending. We're already seeing that. People are cutting out discretionary items. People are brown bagging lunch rather than go to a deli or a restaurant. They're buying generics or house brands rather than national brands when they go to the supermarket.
Taking the bus instead of a taxi.
Right.
Carpooling instead of driving it alone.
They're taking water out of the tap rather than buy bottled water. And then, by the way, there's a phase 4, which is also getting underway, which is a global recession. We're already seeing weakness, particularly in the second quarter, declines in economic activity in both Japan and the Eurozone. And it looks like it is a global recession. So those are the phases 3 and 4. So we're really about halfway through this process.
A couple of questions to follow up on what you said. You said in terms of housing's down about 18%. You think it'll go down before it bottoms out about 35% or thereabouts.
Correct.
Now, for someone who's sitting at home and saying, whew, we've got this house, we stretched to buy it, maybe paid a little more than we'd like to pay, but we're meeting our mortgage payments right now. Are you or are you not telling them that if you think it's been trending bad, it's going to get worse on the housing before it gets better because we're only halfway through?
I'm afraid it's going to get worse.
Noting that some of the housing is regional, a lot of it's regional.
Oh yeah, the weakness is much more intense, quite understandably, in the places that previously were the strongest, namely Arizona, Nevada, California, and Florida. But it is nationwide. There isn't one metropolitan area in the country that has not seen declines in prices so far, and we think that they will intensify.
If I'm in a house that I gave $250,000 for, stretched to get, and it went up to $315 in the estimate of what I might be able to sell it for, and it's back down now to $260, are you saying in general, well, hold on to your hat, because if you think you can get $260 for it now, this $250,000 house, you may not be able to get $235 or $240 fairly soon.
That's right. And the real risk, Dan, is not in the price of the house per se. It's what kind of mortgage you have on that house. Let's say when you bought that house at $250, you had a $220,000 mortgage on it. But the price went up to the $315, and lenders were throwing money at you, and you're getting ads every day in the mail that said, oh, you unlock that wealth. You remember all those wonderful expressions? So you said, why not? You know, we're going to take some extra vacations, and I'd like to buy a new car, so I'll refinance it $300,000. Okay, so now you got a $300,000 mortgage. The house now is back to $265, and the price is going down. Now what do? Do you say, well, it'll come back eventually. I'll continue to make the mortgage payments. I'm underwater. The mortgage is bigger than the value of the house. That's temporary. I'll live with it. Or you do what people are increasingly doing now. They're saying, I'm walking away from this house. And that's what increasingly people are doing. Now, it's a small number so far, but it is increasing, and it's worrisome because if we're right, that prices do end up down about 35% nationwide, peak to trough, then we will see a huge number of people. We will see about half the people with mortgages who are underwater. In other words, their house will be worth less than the mortgage. 45% of houses are owned free and clear. So if you work this out, it means about a third of total homeowners will be underwater on a mortgage. And the amount of money it would take to bring them up to even, to reduce the mortgages down to the level of the value of their houses at that point, would be a little over $1 trillion.
That's with a T.
That's with a T. That's $1 trillion. But my feeling is that that's going to be very hard for any politicians in Washington to resist some kind of bailout. In other words, you destroy the American dream of home ownership for that many people. I don't think it matters whether they're the left or the right in Congress administration. I think something I think is going to come out of that.
Well, I've asked you this before when we've had our conversations, but now, given you wake up in the newspaper, full page, double headlines about financial difficulties, for the average family, what can they do that will help them get through this?
Well, ironically, what the average family should do is what you would hope that collectively they don't do, which is save more money and spend less. Obviously, if everybody does that, and that's what I'm suggesting is about to happen, that consumers are going to retrench, and that's going to be very negative for the economy, but still it's very much in the self-interest of individuals. And my recommendation to people is that they ought to save like crazy, and they ought to avoid incurring additional debt, and they ought to pay down debt wherever possible, and do all these things which are very prudent for them, but say collectively that's what happens in terms of depressing the economy when consumers retrench. If you look at the American consumers, that has been one of the serious problems in recent decades, in my view, is that people do not have any kind of financial reserves. I mean, we all are going to have setbacks in life. We're all going to have auto accidents. We're going to have illness. We're going to have job loss, even for a brief time. But amazingly few Americans are prepared for that, and that's one of the problems. When you have so many people who are constantly living on the edge, they simply do not have the ability to withstand any kind of setbacks, even though setbacks are a normal part of life.
How long before the economy comes back? Are we talking about 12, 15 months? We're talking about 2 or 3 years?
It depends a great deal on how widespread these financial problems are. Now, again, Washington is doing yeoman work to try to contain these, and if they do, then I think we'd probably see the recession run its course next year, 2009, and by 2010 we'd start to see recovery. But if the financial problems really continue to spread, and again, as we get into the phases 3 and 4 of the recession, we're going to have complete new tests. I mean, for example, consumers are looking for ways to cut back. Are people going to say payments on my credit cards, my home equity loans, my student loans, my auto loans, those are discretionary? You get to the end of the month and people are really pressed, and it's a question of putting bread on the table or meeting their credit card payment. Okay, let's say they decide bread on the table, which is my bet. Then that means their delinquencies and charge-offs in credit card loans, and a lot of that has been securitized through Wall Street. So this thing has further ramifications, and that's really is the whole question as to how long this thing could get stretched out. So I would say, if things optimistically, I think you're looking at a recession running through next year.
The next president, whether it be John McCain or Barack Obama, he calls you in. He says, look, I need help, the country needs help. Give me 3 things that the new president could do, your judgment should do, and perhaps must do, to at least cushion what we're going to go through.
Certainly one thing is to ensure the American public that their funds are safe. We've seen lately some problems with money market funds, and they are moving swiftly to make sure that nobody has concern about that, and they don't really say, hey, I want that money in currency, and it is going under the mattress. But I think that's one thing that needs to needs to be
So
absolutely
the first
clear.
thing is say to people, listen, we're going to ensure,
right,
with the full credit of the United States
Yes.
government, that your money market fund is going
Right.
to be okay. Your stocks and bonds, that's another matter, but your money
Yeah.
market fund is going to be okay.
And you need to, I think you need to make sure that people feel that their money is safe.
Second thing the new president should do.
Probably to institute a very thorough audit of financial institutions and to ensure transparency. One of the big problems has been that nobody knows for sure what's going on within these institutions. AIG is a classic case, a very, very complex company, insurance company, yes, but a lot of other activities. And one of the problems there for analysts in Wall Street, who are very good at tearing these things apart, is that a lot of people didn't know what was going on in there. A third thing I would do is I would change the structure of financial institutions so that they cannot, in effect, create what's called systemic risk to the whole system. I think what a new administration could do would be to try to keep financial institutions in a size and a complexity with a transparency, as I mentioned earlier, such that if one of them got into trouble, it wasn't going to threaten to sink the whole ship. That's been the problem lately, is that when you get Fannie and Freddie in trouble, it threatens to sink the whole mortgage market, the whole economy as a result.
It's a little bit off the point, but only a little bit. I hear so many people now saying, the leader of one of these big investment outfits, whether it's Freddie Mac or Fannie Mae or Bear Stearns, you name it, they're paid tremendous sums of money to make profit. The whole system is built on risk and reward. You risk, you win, you get a reward. You risk and you lose, you lose. But these people, by and large, the thing goes to hell in a hack and they get a parachute of $50 million, $100 million. How can this be? Why is this? And it can't be good for us, or can it?
Well, I tend to agree with you. If you look back in the 19th century, the people involved, the Carnegies, the Rockefellers of the world, they owned those companies. They owned them personally. They were the guys that took the risks. And if they won, boy, they won fabulous. If they lost, no wet eyes. Jay Gould, big speculator in railroads, he died penniless. A number of these guys did. I mean, when they went out, they carried them out. Today, you have these people who are really, they're managers, hired hands, not in a deprecating sense, but they don't own the company. They own a very minor part of it, but they make tremendous money. Richard Fuld, the head of Lehman, I saw a tabulation that over the last 10 years or so, he has personally taken $500 million out of Lehman.
$500 million?
$500 million, and the whole thing ends up bust. As a matter of fact, when Lehman announced its first quarter results back in June, Fuld made a statement, and he said, "These results are unacceptable, and I am responsible." And my response to that is, what does that mean? Does that mean that he is going to work for $1 a year until profits are restored? Does that mean he's going to give back all that money he made when they were doing all the securitization and literally making money hand over fist?
Well, clearly none of the above.
No. I think what it really takes, and we're probably going to get coming out of this, we're going to get much more of a stockholder reaction, and stockholders are going to hold management's feet to the fire. There aren't going to be these big walk-away kind of bonuses where Fannie and Freddie CEOs fired in disgrace and walk away with $100 million or whatever.
One last question. If you have someone in the audience that has $10,000 to invest, or maybe $5,000, they inherited the money or won at the racetrack or what have you, in this confused and confusing time, where should they put it?
I still like U.S. Treasuries, and it's not only the safety, but if I'm right that we continue to see a recession, that the Federal Reserve actually cuts interest rates in response, and I think they will, that the U.S. and Treasury obligations become a safe haven, which they increasingly are. I still like the 30-year Treasury bonds.
30-year Treasury bond. The reason I check with you from time to time, because these things can change. Gary, thank you very much.
You're most welcome.
Thank you. Respected economist Gary Schilling. Understanding as best we can what's going on here on Wall Street is crucial to understanding the global economy, because Wall Street is nothing without the international web of resources and people, the buying and selling that make the economic engine go. Our story about copper in the Congo showed how the actions of an Arizona company traded here in New York can have profound effects everywhere from Washington to Kinshasa. Our report tonight is a fitting companion to our earlier recent report about the future of the United States military and what that means for our influence worldwide. Tonight's program is really part of the same conversation, because global power is built on economic power. Military power is built on economic power. When analysts look at what factors historically have accompanied the decline of great powers, many of those factors are economic. A wide gap between rich and poor, high debt loads, and crucially, the rise of high finance as the economy's main engine. That should give every American pause. Gap between rich and poor? U.S. CEOs now make 400 times as much as the average worker. That's 20 times what it was in 1965. Debt? It is unprecedented. Total debt in this country has quadrupled in just 20 years. And the financial services industry is no longer a creation of economic growth, but the creator of it. And finance today, money people pay to move money from one place to another, representing over 1 out of every $5 earned. So, what does it all mean? Senator John McCain concluded that our economic fundamentals were strong, and in many important ways they are, if we look at the same fundamentals we always have. Yet the American people, most with almost as little finance expertise as our two presidential candidates, think the fundamentals just aren't capturing the state of the economy as they feel it. And some economists agree. The man chosen to make decisions about war and peace, culture and law, may well be the one who can best convince voters. He understands that sense of unease, no matter what the numbers say. And that's our program for tonight. For HDNet, from Wall Street, Dan Rather reporting. Good night.
If you would like to add your name to an email list for information on upcoming programs, or if you would just like to send a question or comment, please email us at viewer@hd.net.